Have you been looking at ways to not pay so much taxes, looking at legal ways to reduce your taxable income? Then you are at the right place and I will help you to reduce your taxable income. Hi there, Namaste. This is Akriti Agarwal Iyer and welcome to our next video of the series Taxation. In today's video, I'm going to discuss about all the tax deductions that you can claim to reduce your gross total income. Well, these deductions are basically certain investments, expenses, insurances and loans that you can obtain to reduce your tax liability. So we've divided this video into two parts. In today's video, I'm going to discuss about all the investments and certain insurances that will help you reduce your taxable income. And in video 2, I will discuss about loans and donations. Before going ahead, it's very important to understand what is a financial year. Yes, because for the purpose of taxes, your calendar year is not important, but it is financial year which is considered. Your financial year is the period which starts from 1st April of the current year till 31st March of the following year. So any income that you earn in this period is taxable. So to reduce that income, all the deductions that you have to claim has to also happen in this period. So currently we are in the financial year 2021, which starts from 1st April 2020 till 31st March 2021. So let's get started with all the tax deductions that are available to you. Starting first with the deductions under section 80C of 1,50,000 INR. According to the tax laws, you can reduce your total taxable income by 1.5 lakhs by saving and investing your money in the following options. You have investment options such as employees' contribution to EPF, your voluntary provident fund if you've taken that extra contribution to EPF, your tax savings fixed deposits, public provident fund, Sukanya Samriddhi scheme in case you have a daughter and you're investing in her name, senior citizen savings scheme applicable only to individuals who are above the age of 60, tax saving mutual funds or ELSS, equity linked savings schemes commonly called as ELSS, national pension scheme and certain traditional options like your national savings certificates, pension plans, insurance premiums. There are more options in this list. We've attached an article in the link below and you can go through that. Further, there are certain expenses also which helps you claim this deduction, like tuition fees for 2 children, your stamp duty and registration, one-time expense for a new house, and principal part of your home loan. I will discuss in detail about this in video 2. This is a generic list which will help you get investing to reduce your taxable income by 1.5 lakh rupees. If you want us to do a detailed video on this, then do let us know in the comments below. There are a few more deductions apart from section 80C, like your contribution towards National Pension Scheme. You get an additional deduction of rupees 50,000 if you make a contribution towards NPS. Do remember that this is over and above your deduction under section 80C of rupees 1.5 lakh. So if you are just investing in National Pension Scheme, ensure that you invest 2 lakh rupees in a particular financial year, because 1.5 lakh rupees will go towards section 80C and 50,000 rupees will be claimed under section 80CCD. After claiming these tax deductions under 80C, the government also gives us an incentive to take care of our health. Yes, if you get health insurance for yourself and your family members, the health insurance premium can be claimed as a deduction. So this deduction can be claimed for the premium that is paid towards yourself and your dependent family members, and the amount is determined by the age of each member. So where both you, your spouse and your children are below the age of 60 and your parents are also below the age of 60, then you get a deduction of 25,000 for each, up to a total deduction of 50,000. If you are under the age of 60, then you get a deduction up to 25,000, and your parents, if they are above the age of 60, then they get a deduction of up to 50,000. So you can claim a total deduction of 75,000. where both you and your parents have crossed the age of 60, then you both can claim a deduction of up to 50,000. That is a total deduction of 1 lakh. Remember that this health insurance premium is the actual amount or the limit which is set, whichever is lower. So where your health insurance premium is less than 25,000 rupees or the limits which are applicable to you, you can also claim a deduction of 5,000 rupees towards preventive and health checkup of yourself and your family members. This is a great incentive to get yourself and your family members a good health insurance, because you are reducing the cost of the insurance by claiming tax deductions. After claiming the deductions of ATC of 1.5 lakhs and ATD of approximately 50,000, you also get deductions for spending on maintenance and well-being of a disabled dependent. If you have a family member who is disabled and is dependent on you, and if you're incurring expenses for their maintenance and well-being, you can claim a deduction of up to 1,25,000 rupees. You will have to obtain a certificate from a government hospital on the disability of the dependent member to claim this deduction. The next deduction is for the interest that you earn on your savings bank balance. Did you know that interest up to 10,000 rupees was tax-free? Yes. So any interest that you're earning on your bank balance, now savings bank balance account, up to 10,000 rupees is tax deductible. And if you're a senior citizen, any interest that you earn, whether it's from your savings, fixed deposits, corporate deposits, bonds, up to 50,000 rupees of interest earned across any investments is tax-free. So this is again an additional deduction that you get. These are the tax deductions that you can claim without going ahead and taking that heavy loan or incurring heavy expenses. All the discussions that we discussed today are about making those investments which does not only help you reduce your taxes but also help you financially. Like the first deduction of 1.5 lakh rupees of ATC, you can claim that only when you contribute that money towards certain investments like your EPF, PPF, National Pension Scheme, and many more options. Second deduction of ATD is available to you only when you get yourself and your family members a health insurance. So the premium amount is available to you as a tax deduction up to 50,000 INR or more depending upon the age of the family members. Then the third is the interest income that you earn on your savings bank balance. I'm sure we all earn some amount of interest. So up to 10,000 rupees is tax deductible. So all these options put together will reduce your total taxable income by 2,60,000 rupees. Yes, you can reduce your total taxable income by 2,60,000 rupees by investing your money in the right options. This will not only help you create wealth but also reduce your taxes. I hope this video has given you an insight into how you can start your tax planning and reduce your taxable income. If you're looking at more options to reduce your taxable income, then do watch video 2 of this series. Until then, do let me know in the comments below what more questions you want us to answer with respect to your taxes, and you can also write to us at iplan@wealthcafe.in. Until then, don't forget to like, share and subscribe. We will come back to you every Wednesday and Saturday with freshly brewed content from Wealth Cafe. Happy investing!